Hi everyone, welcome to this week's Swings and Bullish Setups. I'm going to share my screen. All right. So I just recorded this and Zoom didn't send it to me. So I'm doing this again. It's going to be shorter, but I'm still going to try to do it, give it a good honest try here. It is officially recording. I can see it. Let's get into the newsletter. All right. Newsletter. My newsletters. Of course, 40 seconds ago, I was logged in. All right. So this is week of April 10th or April 9th, depending on what time of night it was when I started writing it. I'm not going to be focused too much on any specific sectors, although I am still interested in oil. There is like this back and forth between OPEC cutting production and everybody who's not OPEC increasing production significantly. And those things are battling it out on the market right now. So it's kind of hit or miss there, but I'm still an oil bull. But at the same time this week, I'm more going to be just focused on oversold tickers that maybe have some insider action, institutional buys, or just on the technical side, using the technical indicators if there's some kind of increase in demand during a recent downtrend. That's going to have me kind of opening my eyes up and looking for those ones that market makers are trying to accumulate and sell back off for their quick swings. I'd like to join them. So without getting too much into my intro, let's just jump right in. So first page, we're going to talk about both of these. I'm going to take a screenshot so we can. All right, and let me get a little bigger on the screen if I can. Okay, so what are we looking for here? We are looking for the same thing that started the last bullish expansion. So here's a bullish expansion, right? This is what we want to buy, just that period there. We don't care about this period, and we don't want to buy here. We want to buy right there at the bottom of those two lines, right there. And how do we do it? We look at what's been going on in this period here before the bullish expansion, find the consistencies for what's going on here, right? That's exactly what we do for every single ticker, small cap, large cap, anywhere in between, futures, it doesn't matter. They all will show you the same indicators at the beginning of any bullish expansion. It does not tell you how big the bullish expansion will be. It's not, the indicators aren't going to say, hey, this next one's going to be 100%. Your job is to try to find the ones that are maybe far oversold, extremely volatile, a history of large spikes like that. But at the same time, you want to find these technical indicators that are all the same right before a bullish expansion, kind of right in that line. Where has it appeared? So what do we have there? We have a green upwards arrow. We have a gray upwards arrow. That's my TTM scalper and my PPS. You can see them. They initiate it. They initiate a bullish reversal. There it is. Gray is just behind that blue TTM trend you can kind of see, and the green is right there in the open. Then what is the next thing you see? The TTM trend, those blue arrows instead of red. Every single candle has a blue arrow instead of a red arrow. What that means is buyers are increasing their bid to get in. Instead of askers decreasing their offers to get out, buyers are increasing their bids to get in. And that's a shift, right? That's a new kind of change to what was going on there. Then Williams over -50. Prices can't go up unless the Williams is over -50. You can watch my kids. He's always right. He does change his mind very fast, as you can see, but Williams going over -50 is the beginning of every single bullish expansion. And it always stays over -50 the entire time the price is going up. So there we go. It kind of just went over -50 on Thursday at first, tried to come back down, and then buyers stepped up the pressure again. So on Friday, it was still well over -50. That's called a bullish cross. That's the MACD, and it's doing a bullish cross where the moving averages have bottomed out and are starting to reverse back up. The shortest term moving average is now increasing, right? So it's pulled back above the slower moving average, and that's kind of a bullish reversal signal. Relative volume, what you're looking for is consecutive days of increased relative volume or increased relative volume during a downtrend. And you don't really have it here as much. During the downtrend, you had less relative volume. So it's not really a huge signal. As a matter of fact, I put it in neutral because it's not bearish by any stretch of the imagination. It's just for some reason, not for some reason, for the normal reasons, low demand in the case of relative volume kind of went along with low price action. That's normal. But this is not normal. accumulation distribution is a little bit like relative volume. It's showing you supply and demand of very short-term traders. And those short-term traders started piling in about halfway down that red move. So right around 450, short-term large pockets objectively started buying. Subjectively, I call those market makers. Even if they're not market makers, like that's kind of how I feel like they act. But the biggest pockets who are short-term traders are market makers. Their job is to kind of keep the market in equilibrium, provide supply when there is none, provide demand when there is none. In this case, stock price is falling. There was no demand. So all of a sudden market makers start providing demand. And then all of a sudden they start providing a ton of demand, right? Way over 2, over 4 even. And that's during the downtrend. So it's almost like the market makers are saying, you know what, this is a little bit overdone. And market makers, they're happy to take very small profits. They're also compensated for losses. So it's not like they have to be right. But when they start heavily accumulating something, during a downtrend, I start getting very interested. DPO MOBO, DPO pulls the MACD where it's going. So here the DPO is way over the mobility range. DPO is green. Mobility range is those 3 pink ones. And that green line pulls the MACD in the direction it's headed. So the MACD did a bullish cross and it's kind of curling down. So you're left wondering, is that going to hold? Well, if the DPO, if that green line stays above those 3 pink lines, it'll hold. It'll continue into a bullish spread. So that's showing very strong, and it's kind of suggesting that the MACD will continue. We'll see Monday. TTM wave over 0 is not relevant right now. Normally that's great, but it's only great if the Bollinger Bands are squeezed. They are not squeezed. They are still very wide, coming back together from a bearish expansion. So the next bullish expansion, we won't be able to get a heads up on until the Bollinger Bands are squeezed and the TTM wave is still over 0. And then last, random walk. It's slightly bullish. Unfortunately, this big spike way down there kind of made everything else so hard to read and small that it's kind of hard to tell. But if red is over the level 2 and over green, then you call it bullish. If it's red over green, it's still bullish, but red over green and above the level 2 is kind of what I do tell our scanners to look for when they look for a scanner. And that's what we talk about in the textbook too. It's kind of that 2 level, red over green, X marks the spot. Red over green means this is not random. There is something to this beyond just a random price change. Whereas like if you have a situation where the price goes up 15% after hours on a single 100 share buy, that's probably getting accompanied by a green over red spike, suggesting that no, this is random. This is just some idiot who paid ask when he could have waited. Or she, of course. Anyone can be an idiot. It doesn't have to be just guys. But that's what you're looking at there when it comes to random walk. If green's over red, it's suggesting, hey, this isn't legitimate. If red is over green, they're saying this is not random. This is legitimate. So not high as you want, obviously, but it's still a great thing to look for is that red over green. Altogether, I put this to strong bullish. The big thing that led me to go strong bullish, more than just bullish, which is kind of where it's kind of sitting at from a technical perspective only, is that they had some insider acquisitions and institutional acquisitions over the course of this year. So in December, 2 insiders bought. It was a director, and the second one actually might have been the same director, and then someone got, I want to say someone got their employment benefits. So it might not have been a legitimate one, but there were 2 director buys, I believe, same guy. And then in institutional acquisition on 214, which was 13G that was filed. You can look those up on sec.gov, fintel.io, openinsiders.com. There's all kinds of different ways to look those up. But those kind of signals, along with bullish reversal, has me kind of itching to buy. So this is one of my favorites in the newsletter for this week, and I listed it as a strong bullish because of that. ATHX, we'll talk about this one since it's on the screen. Same signals, of course. We're always looking for the same thing. Here we have PPS right there. Scalper's there. Scalper is like diminishing, weak bullish because it still counts hypothetically, because ever since that one upwards green arrow, there hasn't been a down arrow. But at the same time, it's been more than 5 candles, and preferably we want green and gray to show up. So you see gray behind the blue one there. They're on the same exact candle. We want them to show up within 5 candles of each other. I expect to see the scalper sometime this week, if not Monday. So that's where I'm going to be looking for. It doesn't necessarily need it, but like 95% of bullish expansions start with a scalper and a PPS, with the green and the gray pointing up. So that's curious that it wasn't there. Maybe this counts. Maybe the fact that that one is still pointing up, though I think the only way that it can have a new one pointing up is if there's a wick that goes below that one. So that's part of the equation. So it could be that that's going to hold. Williams over -50. We love that. It's come down a bit, but it's still over the trigger. MACD is in a bullish spread. It's weakening, but it's still kind of like skier, skis kind of parallel. It's not getting smaller necessarily. And if you look down at the GPO MOBO, you can see that it's above, right? The green line spiked up and it's still above the 3 mobility lines. So it's still in a bullish expansion, pulling the MACD higher. And then random walk, we have a beautiful kind of X marks the spot here, red over green. Red has come down, but it's still above green, it's still over 0. So the red X is kind of where, in hindsight, it's always hindsight with the random walk, but in hindsight, a lot of times you get that red over green X marks the spot for an excellent buying opportunity. And here we have it. It's been 3 or 4 candles since then. And there is a danger in that if there's a red spike, when the red line comes down like it has, it's creating a perfect angle for that green over red X marks the spot. Green over red means there's a bearish coming. So that's heads up, that's something to keep your eyes on. And that's why I always have a stop loss idea. Even if I don't set a stop loss, that's going to be my price alarm. That's going to be how I know when maybe the pattern has tried but failed and been rejected. And then the one thing to notice on ATHX is they're out of money. They're needing money. And so they filed a shelf, which means any spike is going to be probably sold into. And they could price that at any time and tank the price, tank the stock price if they do that. So it's a worrisome indicator. The risk here, I probably should have put high, maybe because of that S3, but the S3 is passed. So it was already filed at least. So it's not like we're going to see a new one. We're just going to see an S3A, an amendment to it to know when they price it, because it's not a complete shelf yet. They still have to fill out the rest of the details and let us know what they're going to do. All right, so let's delete this one. Let's talk about a couple others. I want to talk about the ones with the insiders. This one, CGRN. We can talk about CGRN. Why not? High risk. They were given a notice of delisting, which makes the risk higher for me. But they were also told they have until September 25th to fix that, which is not a stock price issue. It's a value issue. So they have to figure that out. A market cap issue, I should say. I believe that's what it is. But at the same time, anytime you get something that's been oversold and is showing you kind of strong bullish reversals, especially times when the oversoldedness was accompanied by increases in demand variables, then I want to look very closely. And sure enough, if we're talking about increase in demand, first look at that. Multiple days in a row of increasing relative volume. For relative volume to increase multiple days in a row is more than just more volume than yesterday. It's significantly more volume than yesterday because it's comparing itself in a relative sense to the previous X candles, whatever you have your length set at. My length is set at, I can't remember anymore, but it's very short term. In the book is correct. Whatever I have it in the textbook is what I have it as, but it's short term. It's like maybe 60 most, 20 to 60 days. So it's looking at aggressive planned buys. So large pockets who are doing something strategic where they're trying to make a large acquisition, but slowly as not to tip off everybody. And that's why you see multiple days in a row, these increasing shares, because they make their initial buy. If it didn't affect the market, they make their next buy. If it didn't affect the market, they make their next buy, and they're trying to accumulate the dip. And they don't know what the low is necessarily, but when they are showing significant demand, all of a sudden, other people notice, and all of a sudden that becomes an actual support range. So relative volume growing shows us kind of maybe institutional, insider. Objectively, it's large pocket, strategic planned buying. Compared to accumulation distribution, which also spiked during this downtrend. Accumulation distribution is short-term, less planned, but large pocket moves. And the shortest term large pockets are market makers. Those are the people who have basically unlimited funds. They create dark pools, not illegally, but in order to provide supply, at least the guise is to provide supply when there is none. But at the same time, they can use that supply to take profits with. So they're accumulating this downtrend pretty heavily. Or someone who's very short-term and very large pocket is buying this specific dip. beyond previous dips. This one from the drop from 140 to 117 struck them as not expected. So they started buying heavily, and usually you do see this black line has come down. The demand has come down right as the bottom hits. Usually there's a lot more buying when it's falling than there is when it's rising, right? When it's rising, it's the lucky few who take the profits, unless it's like a volume induced run. So a lot of times you see that accumulation distribution fall kind of back down to zero, then the price starts to go up, and then accumulation distribution go up along with it, driving it higher. But in this case right now, price falling, demand rising, that's curious, very curious. No insider or institutional acquisitions in a long time. November, I guess there was one insider who bought. There were no institutional in the last, I want to say more than a year, but it could have been maybe 6 months I looked at. And then the notice of delisting, but they'd be given the 25th. So all kinds of fun things could happen. Coincidentally, the stock price could get pumped, or maybe they take on some funding. I don't know. They're going to have to do something to address that, or maybe they get lucky and the stock price just gets back up to $3 and everyone's happy. I certainly would be. Delete screenshot. All right. So the last one I'll talk about today, let's hit on LASE. You guys can see KBN2. There's a strong bull, but let's hit on this one, LASE. I wish there were insider. If there were insider buys, I would be putting a lot more into this than I plan on it. I'm surprised there weren't insider buys, and I guess, you know, in hindsight, maybe I'm not that surprised because they weren't able to file their 10K. But you know, once they file their 10K, maybe take the mystery out of the story, and the people who create their own conspirational stories when it comes to missing information will kind of quiet down. And just having that information, the 10K, might actually help this. Even if it's a bad one, just having something to base the analysis on for people to decide what it's worth would really help. So looking for that to be fixed. Meanwhile, the technicals are all there. You know, you got the scalper, you got this PPS. Let's get the magnifier, I guess. You can look online to see this without the blur. But you got your PPS most recently, you got your scalper right next to it. So they're both suggesting that there's a reversal in play. TTM trend has shifted blue, which means buyers are increasing their bid to enter. Williams shot over -50, MACD in a bullish spread. Relative volume, you can see without the magnifier, is increasing during the drop here, 3 days in a row during the drop. That's odd, even though you see it a lot on the newsletter. That's on purpose. I'm looking for those. You don't see it often in the real world. DPO pulling the MACD higher. It's exploding out of the mobility range right now, that green DPO line. TTM wave is over zero, and the Bollingers are getting tight. They're not quite squeezed like they were here before the bullish expansion, but they are tighter. And the TTM wave being over zero is a great indicator that the next thing is higher probability to be a bullish expansion than bearish. If that TTM wave were to dip under zero, then we'd want to know, because it's worrisome. Recently, we had a huge green spike with a random walk, but that correlated with that drop, right? That green spike was Wednesday or Thursday, and then the price fell heavily Wednesday, Thursday, Friday. So green over red is bad, but then when green comes back down, it creates that angle for that nice red over green X. And the red over green X is a bullish spot, usually in hindsight, because you can't act very quickly with the random walk. It doesn't usually come accompanied with other technicals, but it's giving you a very early idea that this is a red over green. There's a legitimate, not random, bullish reversal happening here. And if that red line spikes over to the number 2, then I think it's a big confirmation that this is worth jumping on. I personally plan on playing this. I really like it when a ticker has gotten kind of really crazy valuations up and down recently, because it just means there's a lot of mystery out there and traders don't know what to value it at. And when there's volatility, there's opportunities for 10 to 15% much more often than just when it's boring out there. So, all right. So last thing I'll talk about is just the trackers from the week's previous newsletter. I've been doing this since mid-December, doing these trackers. The bad one last week was GMVD. I didn't actually play it. I think it started falling pretty early in the week before I even made an entry, but it did fall to the stop loss idea. So I took credit for the minus 11.2 there, but all the others did pretty well. If something didn't reach the 10% level by the end of the week, and also didn't fall by 10% at some point during the week, then I would tell you in the notes if based on the technicals, if it's still kind of in play, if there's a continuation or still bullish technicals, or if it's been rejected and it's just past that moment. So like TIRX, it did hit plus 10% during the week for a very brief half a second candle. So I didn't count that. And looking at the end of the week, it's not like it went bearish or bullish really. It kind of stayed in the consolidation pattern. So it's residually bullish. And then BBLN, I call it still in play. It definitely was over plus 10% a couple of points, but it never really took off, and it was never volume based. It would have been if someone happened to get lucky, set an ask above 10%, and then someone else bought that ask. It wouldn't have been just, oh, there's the bid and the ask over 10%. So I still think it's in play. The technicals are still strong, and the float is still pretty small there. And then TCBP, the same kind of situation. It did spike. I want to say into the 180s. So there was, I could have taken credit for that, but it was only enough for like 1,000 shares tops maybe to get out. So I didn't think that was fair to say that happened yet. And based on the technicals, the way they read it, it's not supposed to happen on just a spur of the moment, just like 100 shares got it. It's supposed to be, using the 1 hour technicals and the 15 together, using the volume signals, you're supposed to kind of get a more substantive and strong bullish move, at least longer lasting than a few minutes. So it's still in play. And then below that, the top 5 of the week last week, none over 100%. First week in a long time that there hasn't been at least one trade over 100%, but still some strong trades with the oil and the AI situation. Actually, BBAI didn't make it into my top 5 somehow. I don't think it should have. I think it was more like 27%. But either way, the big loss last week was I used the profits from the coin calls the week before to buy coin calls again for last week. And then the news started recirculating of SEC investigating Coinbase, and it tanked them. And, there's a lesson to be learned there. It's probably don't use all the profits, but the smart thing was I did not put more than just what I had won. So the stuff I had taken previously off profits from the coin calls just the week before, that's what I lost. It wasn't a new trade, but at the same time, I shouldn't have done it all 100%. I probably should have picked an expiration date further out from within a month so I could get out. And maybe reading into the news and deciding if maybe it's worth just not playing it, because if the SEC is investigating your company, that's not usually good. So that was a mistake, but all in all, a pretty good week. Also, last thing to mention is this is the last week to get the textbooks for 50% off. We're doing the textbooks for 50% off. They come with a scanner, and the big thing is if you get them this week, on Saturday next week, I'm doing a little mini seminar with people who got the book to help them set up their Thinkorswim charts so that on their computer, it looks exactly like the book. I'll show them how to get the scanners working on their Thinkorswim. Those are downloads to Thinkorswim. So you can, fiddle with the technicals, or you can just watch them as they come in and kind of learn from how each time something is called on the scanner, it's the same technical picture. But those go with it. And then the 1 or 2 hour seminar on Saturday. That's over here. If you go to products and textbooks, and if you just use the code BFBook1 for this one, or BFBook2 for that one, it'll drop the price in half. You'll get the scanner downloads, and you'll be admitted to the seminar on Saturday next week. So really looking forward to that. It's just muscle memory, people. Once you learn the technical analysis, it's always the same. It becomes boring. And honestly, every time I make a call, I feel like everyone's gonna go, yeah, same old, because it's always the same thing. But it's still really fun to be able to learn how to make those readings and say, all right, there is a bottom, or looking at it and go, wait a minute, Williams is on the floor and someone's calling it out. That person must be a pumper. Like being able to check on the pump and dumpers with the technicals is huge. Being able to really, truly look at something and go, okay, there is a bottom forming here. I don't know how long it's going to last, but there is a bottom forming here, and there's a stop loss idea, and those kinds of things, they come with technical analysis, which is always the same, every ticker, large and small cap. The way to day trade, the way to swing trade, you just kind of change the time frames on the technicals, and we're going to go over all of that. It's in the book, and both in the book and in the seminar next week. So I'm looking forward to seeing people there, and thank you for joining me this week. I'll try to do another one in the near future. It's hard to have all the time to do the video newsletter after doing the actual newsletter, but I'll probably be able to get another one done eventually. All right, guys. Appreciate you being here. Thank you.